Hello and welcome to the CFO newsletter. My name is Sean Allison. Thank you very much for joining me. Well, what happened on Friday in the markets? The short answer is not a lot. Okay, so if we look here at the one-day performance of the various sectors and the different stocks that make up those sectors, we can see that most of these stocks were up or down by less than 1%. So nothing terribly significant, pretty uneventful sort of day. And, this heat map here showing you, different time period and the performance there is obviously very useful while the market is open, and just to get a quick snapshot of what happened for that particular trading day or over whatever time period that you're looking at. So, simply going to maps at the top there with FinViz can be useful as well. But we can see here that it was pretty uneventful as far as Friday's trading. So what is going on with this market? Let's have a bit of a look, right? We're trading the market. We need to understand what is going on. And we can see that the S&P 500 is grinding higher. We have a double bottom here. You can see there, one bottom there, another bottom there, bouncing off the 50-day moving average, grinding higher. Haven't taken out this prior high here yet of around 4240, but that is something we will be keeping an eye on. One of the things that I do look at is institutional money flow, and it does look right now as if hedge funds are starting to move back in to the market, which is interesting after several weeks of being out. So, obviously they can't stay out forever. They have to deploy their funds. And right now, with a lot of stocks being beaten down, some pretty good quality stocks as well. There are some pretty good opportunities there if you know where to look. Stocks that have moved down 40, 50, 60% from their yearly highs. Now, one of the things that we use here at CFO is the opening range on the SPX. Okay, now we do this on the third Friday of the month, options expiration. All it is where we put the high and the low of that day. If it's above that upper line, we're in bullish mode. If it's below, we're in bearish mode. If it's in the middle, we're in neutral. So right now, we're technically in bullish mode, okay, as far as the market goes. However, obviously today is the 1st of June. So we're going to be resetting that range as of tonight or today's trading action, okay? So after today's session is finished, we'll set the high and the low of today's trading range on the SPX for that day, and then we will have a new opening range until when? The 3rd Friday of June, okay? And this is more than 90% accurate, so it really does work very, very well. So we need to wait for a new opening range is what I'm trying to say, okay? And that will happen on Wednesday. We'll have a new opening range. So if we look at our workspace, it sort of backs up what I was saying before, the fact that overall market just flat as a pancake, pretty much. Not a lot going on. Gold continuing to move higher. Still liking gold, in particular the gold miners. I still like silver from here. And we have various positions set up and that are doing very well at the moment. Now, we see a nice double bottom here on the Nasdaq and could potentially be forming a bull flag here as well. Interesting. Most of the major indexes, in fact all of them, are above their 21 EMA, which is a line in the sand we use on the daily chart. Shows us, between bearish and bullish. And right now they are all above that line, right above the 21 EMA on a daily chart. So right now, nothing terribly bearish about the market right now. Could that change very quickly? Of course, okay? So I'll tell you one of the hedges that I would be setting up right now. One of the hedges that helped us make thousands and thousands of dollars just recently. So, if we look at the different sectors, financials have been very strong. Obviously that double bottom pattern here that we've seen on the Nasdaq, we're seeing here on technology. That is broken above the 21 now, forming a bull flag. That could potentially move higher, some money flowing back into tech. Again, fund managers have to deploy their cash. They can't leave it sitting on the sidelines. People want a return. So it may be coming back into the market in the short term. So interesting. Retail was down 1.26% on Friday, but still above its 21 EMA. So just as a very quick snapshot, that is what's going on with the market. Sean, what hedge would you have on right now? What's a way that you would have yourself protected, right? Obviously, you've got some long positions where you're looking to make money as stocks are moving up or staying above a certain price. would it be smart to actually have a hedge in place now as well? Absolutely, right? So one of the ways that you can do that, and this is what we did last time, in other words, just in the last couple of weeks, we made very good money as the VIX spiked 32% in a day. Okay, it moved up to $28. Okay, so we had some call options here on the VIX, and I think that would be a pretty smart idea right now. So I'll let you know what we're doing. Right, I want to try and help out everyone listening here right now. So right now, the VIX is 16.76. This is the fear gauge of the market. As the market goes down, the VIX goes up, right? So recently spiked very nicely, 32% in a day. Okay, it went from a low here. This is how quickly it can happen. Went from a low of 1668, and we're talking 1, 2, 3 days later, it hit a high of 2838. So it can move very, very quickly, as you've seen back here, right? So we are now buying call options again. We made a lot of money on the call options we bought, which were expiring in June, right? They've already been closed out. And now we are going to set up another lot of calls on the VIX. Now, I would take these ones out until the end of the year. So I'd probably go out to the 19th of November. Okay, that's what I would do now, and I would probably just buy the 16 strike call, right? I think that's a very smart idea right now with what's going on globally. Now, let's have a look at some of the positions that we are in. I suppose that would be a good place to start as well. So GDX is one of the positions that we're in right now, gold miners. This one's interesting because of the charting pattern that's actually emerging on this particular chart. So strong move up with good volume here, as you can see down the bottom here, some igniting volume on the move up. So a nice move higher, forming a bull flag. So pretty much what I would see here is if we get a close above this bull flag here, in other words, it's going to trigger the bull flag, you stop right there at the prior low, probably here. So if it closes above, say 40, and then put your stop there at the prior candle, the low of the prior candle. This would certainly be a good development for us because we're already in the position, right? We've already been doing very nicely, along with another very nice gold mining stock, which is Newmont Mining, has a 4% yield, which is obviously very attractive as well. That's forming a bull flag as well on some pretty good volume. We've done very nicely on that one. So, there are a couple of ideas, okay, that we're in and that we're doing nicely with right now. So keep an eye on those. Now, if I was going to look for something right now, let me try and give everyone something here, right? So again, a lot of guys just get on here and talk and don't really show you something. Teach me something, right? So here we go. Go to FinViz, probably the best free stock screener on the internet. We come over here to Screener. Let's screen for something right now, okay? So this will help everyone and we can come up with a couple of ideas. Now, like I said, tech in particular and, quite a few other stocks have, been beaten down 30, 40, 50, 60% off their yearly highs. So what I want to do is now for me as an options trader, I want to make sure it's optionable. If you're just a stock trader, then you don't need to worry about that. Now, what I would also do, I want to put in, say, 4 or 5 of these. I would also say, look, I want something that is above the 200-day moving average, though. Okay, most every fund manager on planet Earth looks at that. A lot of algorithms look at that as well. I want something that has, that is above the 200-day simple moving average. I want something that's sort of been beaten down a little bit, right? So I want something that's more than, say, 40% below its yearly high, its 52-week high. Okay, I want something that has a short float or short interest above 20%. Okay, so that brings us down to, from around 7,000, 8,000 odd potential ideas, down to 23, okay? So what I would then do is come and click on Basic. And what I do is I look at specific charting patterns here. I look at something that is starting to move up. I look at something that, maybe the shorts are wrong with, okay? So obviously the people that have shorted the stock have been making money as these stocks have been going down, right? Been moving down strongly and they've been right, okay? But at some point, stocks are not going to go down forever unless they're a terrible company. At some point, if they are, they've got good earnings growth. I mean, really, that's what you're looking for. Stocks that move higher are based on earnings growth. Okay, that's the number one reason why a stock would move higher. People are in business to make a profit, so they want to see the earnings growing, and that's definitely something that you want to keep a close eye on. So, I've clicked on basic. I'm going through some of these. CVM, double top, nothing really dramatic there at the moment. I want something that's sort of building a, well, there you go, right? Building a base and looking to potentially move higher. Now, this one, a little bit hard to see, above the 200-day moving average. Okay, so it's broken this trend line here. It's just got above the 200-day moving average. Let's have a look at it on my chart because it's a bit hard to see there. So we come, let's look at the chart. I've just finished a recording, so my computer's being a pain in the butt. All right, now, FIZZ. So we have a look at this on my charting software here, a lot easier to see. So we can see that it has broken above that trend line there. There's the 200-day moving average, the red line. So it's broken above that, or closed above that, closed above the 21 and the 50. Okay, some decent volume. Now, if we look at the 50-day moving average volume there, it's around 511,000. It broke above the 50-day moving average on 663,000 volume. It's okay. This one looks like it's found a bit of a base here and could potentially move higher. Now, this is an interesting one because if we have a look at this, well, let's have a look at a couple of things, right? So that's one thing, okay? So that's one thing. So we've found an idea. Let's now have a look at the last lot of earnings. Okay, so the last lot of earnings here, we can have a look that they anticipated 33 cents earnings per share. They come in with 39 cents earnings per share. They expected revenue of 242.2 million. They actually had revenue of 245.9 million. So they beat on earnings per share and on revenue, right? So beat, nice, right? Now, I would probably come back here and I'll have a bit of a look at the PEG, right? So price earnings growth, PEG, right? Price earnings growth, something around 1 is very good, right? So it's showing that you have GARP. What's GARP? GARP, growth at a reasonable price. So if you have GARP, growth at a reasonable price, that means you're not paying too much for the forecasted earnings growth of that company. So what is the forecasted earnings growth? Well, for the next 5 years, they're expecting a 25.56% earnings growth per annum. Okay, so that's pretty solid. Now, this is obviously a company that has had a pretty significant move down, right? There's no doubt about that. But I think that this company here could have a pretty big move up from here, or at least start having a move up when we start to take into account the high short interest here. So 48.86% of the float is short. That's very high. Anything above 20% is pretty high, but 48 is very high. Short interest ratio, or days to cover, that's 16.53. That's very high. So what does that show you? It shows you how many average days of volume it would take to buy back all of the short stock. 5.6 million of them, right? So it takes 16 days to actually buy back all the short stock. So what does that mean? That means you've got longer period of time that the rally could continue, right? Because what caused the stock to move higher? People buying it, okay? So if the shorts start to feel as if this has now reached a bottom and going to start to move higher, it's, I looked at this with the discounted cash flow model for trying to value this company, the intrinsic value. And it is undervalued, right? I don't want to get too complex, but it is undervalued right now, right? So it's an undervalued company. We're not paying too much for the forecasted earnings growth of the company. It has high short interest, which could fuel this stock higher. This stock was over $90 not that long ago, okay? So, there's a few reasons why I think this stock could do well going forward, and it is certainly one that I wouldn't mind setting up, not a hugely aggressive position on, but for me as an options trader, I don't have to take massive risks, okay? So, I could set up a position right now on this. In fact, I will. I'm doing it right now. I've just spoke to my members about it, where I will set up a position on this. It's a spread, okay, where we're buying and selling an option at the same time with a very fixed limited risk, and I could make around 191% return on the amount of money that I'm risking. And the stock, guess how far it has to move? 7 cents. 7 cents to make 191% return on risk. Options destroy any other investment vehicle out there. Far better than just buying a stock, in my opinion, by miles. And once you fully understand options, a lot of people think they do, but they don't. Once you fully understand options, you can see the true potential here. They reduce risk, not increase risk. So I'll be setting up a position on that now. Now, there was another one in here that caught my interest as well. I'll just mention this to you because I'm going to be setting up a position in this soon. Now, I'd mentioned to everyone, here it is here, Lemonade. Now, I mentioned to everyone that I was doing a spread training webinar on the 2nd of June on Wednesday. I had a prior speaking engagement on Wednesday, which my booking staff didn't know about, so I had to change that to the 3rd, right? So I will be doing that same spread training and how to trade with a small account and really do it in a very conservative way, and look for some big potential ideas as well, and really show you how I utilize options and how powerful they really are. So that will now be happening on Thursday, the 3rd of June. So yes, 100% it is still going ahead, and just letting you know that. I think we've got around almost 900 people registered, and I think the room takes 1,000. So yeah, definitely come along. I think you'll definitely learn something from that, and I'll show you some fantastic ways that options can make you a lot of money and how versatile they really are. Now, Lemonade, this one here, I think is interesting, right? So it's found some support at this trend line, had a nice move higher here. Obviously, because we've set the metric there, or we've set the criteria, it is above the 200-day moving average as well. Okay, so above the 200-day moving average here, nice V-shaped recovery there. Now, this would be interesting, only just above the 200, right? Now, this one's interesting to me for a few reasons. Obviously, not that long ago, it was 188, for goodness sakes. But this is an insurance company, and it is very interesting here because the reason that it's had a big move down is because they've had a huge amount of claims, okay? So normally, I mean, in their 4th quarter, for example, their loss ratio, their company loss ratio was 73%. Sean, what does that mean? That means that for every $100 they took in with claim income, right? Someone paid them, okay, to get insurance. They paid out $73, right? So they took in 100 and they paid out $73 to pay claims. What happened is there was a huge amount of terrible storms, and a whole range of home owners and renters incurred big losses, and the claim ratio went to 121%. So they were paying out more in claims than money they took in. Obviously not a good scenario for any company, and that's part of the reason why it moved down. However, things are starting to normalize a little bit now, and this particular company, the average customer is paying 25% more to the company than what it was a year ago. Now, that is pretty impressive. In other words, they're upgrading insurance, they're adding other forms of insurance, maybe renter's insurance, or, maybe they're pet insurance, whatever, right? But they're 25% more from what they were doing yesterday. And that's pretty impressive. The other thing is, with Lemonade, they have around 1.1 million customers. Now, they did this, in other words, they obviously have reached 1.1 million customers in 4 years. That's pretty impressive when you think companies like State Farm, which is an insurance company, took decades to actually reach 1 million customers. So pretty impressive growth here with this particular company that was trading above 180 not that long ago. And I think this could be a very powerful potential trade going forward, providing you set it up the right way. Now, this is really for sort of, younger sort of demographic, I suppose, because a lot of this is done online, where you can get your insurance very, very quickly. You can get your insurance policy all set up and done within minutes here, right? They use a lot of AI, and this is something that is really starting to take off. And I think the potential for this company is is huge. The other thing with this company is the fact that they haven't really, well, they haven't at all, got into automotive insurance. Now, automotive insurance is around a $300 billion a year industry. So if we could start to get some of the customers, the 1.1 million customers that Lemonade has, to start buying car insurance, for example, this could really add significantly to their profit potential as well. So very interested in that, and that's certainly something that they're going to be doing. So the fact that they can really get people over the line very quickly, get them insured very, very quickly, and they collect 100 times more data points per customer than a normal insurance company would. And that data can really help them significantly grow their business. They know a lot more. They utilize AI. And the fact that they can get their customers insurance within minutes without all the hard paperwork and lengthy forms, it really does help. Okay, so I think for me, this company going forward could do very well. Now, the other thing with Lemonade is the fact that they have high short interest as well. Okay, they've got 27% short interest. Now, again, if you don't know how short interest works with propelling a stock higher, have a look at one of the videos that I did just recently. It was just a couple, I think 2 videos ago. Very, very powerful. So actually find a trade there as well, which you guys would probably like. But, 27% short interest, which is very high. Days to cover is a little bit light on, but very high here. Over almost 10.5 million shares that are shorted right now. So that will obviously propel the stock higher also. But I think this company has great earnings growth prospects. And yes, they've been beaten down, but this is a good time to potentially, right, if you choose to, again, I'm not telling you what to do, to potentially set up a long position here. So this is something that I'm going to do, but I'm going to do it through the power of options, where I'm taking I'm not going to go out and buy the stock at $90. That's just ridiculous. Even if it has come down from $188.30. I utilize option strategies that reduce the risk dramatically, and the upside is much bigger, right? And, utilizing time to work for you instead of against you is a very powerful thing. So a lot of people look at options and go, well, time decay. Things have to happen before a certain time. That's true, but you've got to be able to understand strategies that actually utilize time in your favor. And again, most people don't understand how to use options. So I'll be talking about strategies like that on Thursday. And, that's another potential idea there for everyone as well. So Fizz, getting into that one now with a short-term position, okay? Stock only has to move up 7 cents. And I'm going to achieve my goal on that particular trade, which is fantastic. And Lemonade here is another position that I'm going to set up longer term, much longer term, but I'm going to be utilizing the power of options to actually pay for my trade as each day goes by. Right? That is a beautiful thing. Again, I'll talk more about that on Thursday in the training. Thank you very much for listening. I hope you got something out of this. Again, if you wanted to sort of tell me that you did get something out of it and that you want me to continue to do these, send your email to support@cashflowoptions.com.au, or maybe a particular topic that you would like me to discuss. I could do that as well. All right, my friends, my name is Sean Allison. Thank you very much for listening. All the best, and bye for now.